The global economy should perform better in 2020, underpinned by a US-China trade truce and lower interest rates, Schroders chief economist Keith Wade explains.We recently upgraded our 2020 global growth forecast to 2.6%, due to prospects of a Phase 1 US-China trade deal and lower US ratesUS interest rate cuts have contributed to some of the most favorable borrowing conditions in a decade, even as US consumers remain well supported by full employment. A US-China trade truce would boost the prospects for the eurozone and emerging markets, although we see only limited action from European governments to support growth after a spell of weaker growth. The world economy looks set to pick up in 2020, extending one of the longest ever periods of expansion. The slowdown this year has led to concerns that the US economy might contract. In fact, we see activity gaining support from an easing in US-China trade tensions and lower US interest rates. We have upgraded our 2020 global growth forecast from 2.4% to 2.6%. We expect a Phase 1 deal between the US and China, which was first announced in mid-October, but is yet to be finalised. It would hopefully prevent the two countries implementing further tariffs on each other's exports and potentially reduce those in place. This would prompt global trade and business investment to strengthen. Activity could then improve in Europe and Japan, as well as the US. We have also upgraded our growth outlook for China. We see emerging market economies gathering pace on the whole, although there are still concerns around country-specific issues in Hong Kong SAR and Argentina.Trade tensions. The prospects of a trade deal have improved, as the chart below shows. The index displayed monitors the number of Reuters newswire articles containing pro-trade deal keywords compared to those containing anti-trade deal words. There are good reasons President Trump may be more willing to strike a deal now. The president, facing impeachment proceedings at home, and with the election looming, needs to boost US activity. Having already played the fiscal card through tax cuts in 2018, he is left with little option but to provide some relief on trade, particularly to his base through increased purchases by China of agricultural products. Meanwhile, the US seems reluctant to reduce tariffs, which China is pushing for, and progress is slow. Trade deal spells brighter days ahead for Europe. The prospect of at least a partial trade deal between the US and China is good news for the large export-driven economies of the eurozone. With many European economies seeing healthy domestic conditions, a rebound in trade could lead to a positive outcome for the region in 2020. We have raised our forecast to 1.2%, from 0.9%. We see new European Central Bank, ECB, President Christine Lagarde staying the course. For more on this story, visit the news article link.